I think 2025 will go down as the year that the huge risk that nature loss poses to assets, to sectors, to economies really sank in.
Welcome to The Greener Way. I'm your host, Michelle Baltazar, Director of Media at FS Sustainability. We are recording on Gadigal land and we pay our respects to the traditional custodians of country and elders past, present, and emerging. Today's guest, Estelle Parker, is the co-chief executive of the Responsible Investment Association, Australasia, or RIAA for short. We spoke to her back in March this year, just before RIAA's annual conference, and how quickly has time flown, because here we are at the end of the year to find out, has it been a good year for RIAA, and what can we expect in the new year? Estelle, thanks for joining us.
It's always great to be with you, Michelle.
Now, this is a bit of a time machine, but for RIAA members who are listening to us right now, can you walk us through what were the industry highlights? If you like, let's do a countdown of 3 key industry highlights for you.
Well, certainly, I think one of them would be the regulatory and policy developments that have happened globally. Of course, on the one hand, we've seen sort of the EU, for example, announcing a deal really recently to update their sustainability reporting and their due diligence requirements, which actually reduces the number of reporting entities and simplifies sustainability reporting. And in New Zealand as well, which has been a global leader on reporting, the first to implement mandatory climate reporting, has raised the threshold for reporting companies, which means that a number are now exempted, as well as managed investments. However, I would say globally, we've seen some really exciting policy and regulatory developments that I think, Michelle, have really driven the maturation of the market in other jurisdictions. So, for example, countries including Japan have issued sustainability reporting standards that are based on the ISSB, the International Sustainability Standards Board's standards. India has issued some ESG score disclosures, made those mandatory for mutual funds and for insurance companies. India, which is a huge market in our region, has released government frameworks on the Sustainable Development Goals and CSR. And China as well, lots of developments there in terms of carbon disclosures, registry launched and so on. And in Australia as well, some really supportive policy shifts that can really help to drive capital towards more sustainable practices. So we have just recently, as many of your listeners would have been keeping abreast of, the introduction of the nature laws, the reforms to the Environment Protection Act, which is really exciting. This year, we also saw a modern slavery commissioner appointed, which many who've been working in the modern slavery space have been waiting for. And we've got really great foundations policy-wise in Australia. We've seen the Sustainable Finance Taxonomy released, of course, and pilots being undertaken. Climate-related financial disclosures have commenced. And so really that recalibration of the policy settings have been a really positive development. And as you know, Michelle, we at RIAA, having run RIAA's certification program for responsible investment products for the past 20 years, are working with the government on its product labelling regime, seeking to make sure that it sets a really high standard, mitigates greenwashing in the market, but also provides confidence to product providers that they can have the level of flexibility to encourage rather than restrict sustainable investment. So it's been a really interesting year, I think, policy-wise.
Estelle, you're brimming with enthusiasm. I couldn't even get a word in. But as you rightly pointed out, the policy shifts and product labeling, certainly this year from an investor point of view, not necessarily a responsible investor, there were some concerns around greenwashing. And I can see that RIAA has been busy all throughout the year addressing those key concerns and being at the forefront of the debate as well, making sure you represent responsible investors. Has there been a sense of urgency, I guess, around nature risks? Is that why this has become a talking point this year? Or do you feel like it's because we now have a more solid grasp around climate risk and we're now just moving on to another big issue?
I think you're right, Michelle, that I think 2025 will go down as the year that the huge risk that nature loss poses to assets, to sectors, to economies really sank in. amongst the investment community. And I was at the Global Climate Change Conference of the Parties recently in Belém in Brazil, and nature was definitely a huge focus there, as well as in the margins and during the PRI in person conference. So we know that over 50% of global GDP is moderately or highly dependent on the services that nature provides, and that is now well and truly part of investor considerations. This is a risk that you can't diversify your way out of, but it's also a huge opportunity, and I think investors are really starting to recognise that.
Back in March, when we first talked about, well, what are the key highlights? How do we expect the year to kind of unfold? There was a subdued outlook because of what's happening in the US. But it seems to me like everyone just kind of just put their heads down and started working behind the scenes. Can you tell us RIAA's, kind of makeup in terms of your committees? How has the engagement been this year?
It's funny you mentioned sort of how time flies, and it's hard to kind of remember that President Trump actually took office less than a year ago, right? He took office on the 20th of
Yes.
January 2025, and ESG was really caught in that cross current of US election politics, of geopolitical instability. We've also had cost of living pressures, and so that criticism of ESG really ramped up in the US. And I think it is, of course, due to a misunderstanding of what ESG actually is, but you can't ignore it because it does have ripple effects globally. And we've seen just over the past couple of days that there's further sort of legal risk around proxy advice. And so that's something that definitely has an impact. But as you say, investors are still, of course, integrating environmental, social, and governance issues into their decision making. They recognise that this is a material issue that they need to address, and that it impacts in long term. And so they may be speaking in different language or speaking less about what they're doing, but they are absolutely focused on continuing their ESG integration and also identifying those opportunities. And I think sort of globally, there are still shareholder resolutions being proposed at AGMs. There has been very, very low support for what they would call, anti-woke, in inverted commas, resolutions globally. And in Australia, the support for ESG-related resolutions has actually grown. So Australia and New Zealand, the responsible investment markets have been really resilient. RIAA certified funds has actually grown. The assets under management grew to $202 billion, which is up nearly 15% in the past year. And that's really supported by the strong returns. That's research that's been done by ISS Market Intelligence. So when you kind of look beyond the rhetoric and the politics and look beyond the US, we're really seeing markets evolving and very little actually pulling back of ambition.
That's great to hear. So just to recap, it's almost like a two-speed economy where globally there's been some reticence around ESG and sustainable investing, but the picture in Australia couldn't be different. We're seeing sustainable funds outperforming. We're still seeing that the gathering of funds under assets, bearing in mind that we all feel the vulnerability of the market to what the U.S. government's doing. Now, shifting away from talking about the key trends, let's talk about RIAA and the organization's milestones, if you like. You've talked about certification earlier, but just share with us maybe two of your main achievements this year.
One thing that I'm really excited about is the launch of RIAA's index certification. So RIAA is now certifying indices. We've been through that process for the first two indices that we have certified, and it's really, really exciting to see that out there because it provides that third-party verification that an index, in these cases indices that make some kind of climate or sustainability claim, are true to label. So that's one thing that we've launched this year at our New Zealand conference, and really excited to see the first certified indices out there in the market, Michelle. And the second thing I'd highlight is that recently First Nations People's Rights Working Group launched some research into First Nations investment markets. It's a really fantastic report called Charting the Path, And it really talks about how investors can lean into supporting First Nations economic self-determination, whilst also focusing on fiduciary and really fantastic returns. And so this is something that the community at RIAA has been working on for quite some time, and it's a very comprehensive kind of outline that really looks forward into how investors and other stakeholders can support better outcomes for First Nations peoples.
Well, definitely at FA Sustainability and Financial Standard, we're constantly covering all the developments with First Nations and investing, because truly it's almost like arguably we're at the nascent stage of really making sure that's well cemented into mainstream investing and all the considerations that come with First Nations.
That's right. We have been piloting as well, Michelle, the Darwin Business and Investor Initiative, which, as you know, is an initiative that RIAA has participated in partnership with the First Nations Heritage Protection Alliance and the UN Global Compact Network. And that is centred around First Nations cultural heritage protection and how companies and investors can ensure that free, prior and informed consent is given to the management of our really important and unique Indigenous cultural heritage that we have here in this country. So those pilots are going ahead, and we'll be able to kind of come out with some more information about that at RIAA's conference in May next year.
Speaking of which, I was going to ask you, it's been a busy 2025. What can RIAA members expect in 2026?
Look, we are working at the moment, of course, on the conference program, and we'll have some announcement about some speakers, including some international speakers that will be there in person. So your listeners should definitely look out for that. Our working groups are, of course, we have as many as engaged as ever members from some of Australia's largest super funds, investment managers, as well as impact investors working on themes like nature, like First Nations people's rights, modern slavery, human rights. So we'll definitely be continuing and ramping up that work next year. And our policy program, of course, will continue to focus on ensuring that the government and the good people in Treasury get the product labelling regulations right as they come into effect, likely in the next kind of 12 months or so.
Well, that's fantastic. Again, busy 2025, and it looks like 2026 is also going to be a ramp up of all your initiatives. Now, I don't think it would be fair if I don't ask this question, but certainly there were critics in the market early in the year after the US President Donald Trump started reversing a lot of the policies. And they're arguing, well, is ESG dead? Is responsible investing dead? What would you say to that?
I would say that responsible investing is absolutely not dead, and there's a lot of data that shows that. Firstly, 88% of Australians actually expect that their super fund and their banking will be invested sustainably and ethically. And interestingly, those findings have recently been replicated at a global level by Morgan Stanley, where they've actually found that 99% of Gen Z and 97% of millennials are actually interested in responsible investing. We also have the industry, I think, partly as a result of the increased scrutiny that it's received over the past couple of years, really maturing, and expectations have risen. So claims aren't being made that can't be fulfilled, which I think is actually a really positive thing. And it is, I think, still considered, and even more so, a fiduciary duty to consider risks and opportunities around key global trends like climate change, like nature restoration, and on the flip side, the risks around the destruction of nature. And also looking at things like trends like inequality, access to health, and so on. So ESG is very much alive. It's maturing. It's really, really exciting time, I think, to be part of the industry.
Well said. It sounds like it's arose by any other name. It's still very much there, and people are investing, and certainly the younger generation. So Estelle, I think the board, yourself and Dean deserve congratulations for a job well done in 2025. And once again, thank you for joining us.
Thanks so much, Michelle. And congratulations as well to you and the whole team at FS Sustainability on a great year. And looking forward to speaking again next year.
This is The Greener Way. I'm your host, Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.